Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is host Richard Benuli. Today is Thursday, November 9th. We have Judd Hirschberg back on the program show. Judd is president at White Wave Trading, a trading company. He's run various proprietary trading groups and has over 45 years of trading experience. He's developed awesome indicators and a repeat process-based approach, very important for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology and also updates on the financial markets. And so today we'd like to understand what Judd is currently seeing in the financial markets across asset classes and jurisdictions. Welcome, Judd.
Thanks, Richard. It's a pleasure to be back.
Cool. I thought we'd begin with like the bond market as the ultimate base, and maybe the 30-year, if you wanted to look at that.
Why did it just do that to me? Okay. Well, let's try to get this up here. I know what I've done. Hang on one second. I'm just not thinking straight. It's been a long day. So we'll start with the yields and the futures. So let's just see what the map we've been following. We've talked about this before. The first time we came down in the bonds, this is life of futures. This is the path that our interest rates have been following. So the first time down, into that life of contract fib is basically 50% of the life of the bond futures. It rallied basically up to the next big Fibonacci retracement. That was basically a 14-point rally in the bond futures before they rolled over and came down here. Into this fib is this fib between the half and the 2/3 is the spot that everybody in the room bought the bonds here. And the first time we got 5 points out of it, it came all the way back down and put a lower low in, 2 weeks ago?
Okay. Yeah.
And then it took off on that Wednesday. It had just been consolidating around this level, and then it put in that low for another rally. And that rally didn't go high enough again. It basically gave you another 5 points, or 4, 5, 6 points, 7 points. So it's stopping again. And if right now I'm looking at, I need a 112 print. If I get a 112 print, the bounce in the bonds is over, and we can come all the way back. Well, we'll retest in here and possibly come back down to parity. So I want to just show you the twos aren't quite following it, but the 5 years are basically doing the same type of swing.
Mm-hmm.
So, it's all about risk reward and where you can get away with a trade. And this basically says that either it stops here and we can come all the way back up into here, or it keeps on going. And so far, you have to get over this previous long-term life of contract fib. And the only time I use Fibonacci work is on very long time frames. And the Fibonacci worked best on life of contract, 4 or 5 decade charts.
Yeah.
You can see the daily today, the 5 years looks in yield took off. I'm not convinced that it's going anywhere. The 10-year looks like it has a little bit more room to go. And these are just the short-term places. The bonds, stopped at a decent level again. And this is the yield. And the bond futures couldn't get going up in here. And this is a daily U.S. session chart. This is not the all session. So I look at them both. I want to, especially in the bonds and in the indices, I like looking at the U.S. session charts because it tells me a lot more about how where the market is starting and stopping.
Yeah,
it's moving from point A to point B. And here's a look at the 210 curve.
Yeah, the 210 spread.
And this is the same thing. It tried to get up to this, that line is a life of contract line. So that's from the 1980 low to the 2010 high. It's no small thing. So it tells you how it's moving. I mean, when it got down here, the 210 was massively overdone. And, I know that a lot of guys in the room all bought the twos then and had a really nice trade off it. So, it looks to me like the bigger moves in the curves and in the straight bonds are over.
Okay.
You're going to still get a lot of volatility, but the 30-year yield chart is the one that I think is the most interesting.
Today it went up quite significantly, right on the.
Yeah, but it's. The first, I drew it from the Plaza chord swing down just to see how it's moving from point A to point B.
Yeah.
And there's room for this to go to, the yield to go to 6.364.
Wow.
So, it's not, everybody's getting all wound up about what it's doing. It hasn't done anything yet. I mean, it's just, it's trying to decide in here if it's going to come back down and retest or just keep on going. And where it can go is all the way back to where it started, which is 7.7%.
Wow.
So, there's only two swings I'm looking at. I'm looking at the 85 swings down to whatever the low is, or the low in yield, or I'm looking at the 81 swing, which was, that was Blumenthal. And we had, 15% interest rates.
Yeah.
So just on this alone, if you look at this, you're expecting, just something over 6%, which is, I think, just around 100 in the bond futures. So it's another 12 full points lower.
Yeah. And like moving from here, do you want to cover like currencies or equities next?
Sure.
Which would be more logical for your.
All right, let me just get to this other page. All right. Well, I think that the most interesting one is dollar yen, because everybody's got this wrong. From a fundamental perspective, guys think that this is severely undervalued compared to the euro and some of the other currencies. But I'm just looking at it technically, period. And trying to be objective about what it's doing.
Yeah.
And 152 right now.
Right now it's about there, yeah.
We start, hold on, am I on the right page? Where am I? Okay.
Yeah,
You see,
151.3, I think, something like that.
Yeah, we're at 151.34 right now.
Okay.
If we start closing over 152 on a weekly basis,
yeah,
I'm looking for minimum 169.
Wow.
And how am I getting that? This is a life of contract swing. I'm going to go from the 85 swing, which is Plaza Cord. And you're minimally looking at a 50% move. That's just shy of 169. So where I think ultimately it wants to go, and I don't know how, and I will say I don't know the exact path. Only that if this is to happen, our interest rates are going a lot higher.
Yeah.
Technically, we can come back to 222 and retest the Plaza Cord.
Wow. That's massive. Yeah.
Yeah. So there's going to be all stops, but I just look at the chart just for the potential. That's it.
Okay.
If I go to euro yen, this is trying to come back and retest the 08 high, which is 169.97. That's another 7 figures. When I go to a shorter time frame and I see what this is doing on a quarterly, and what the yen is doing on a quarterly by holding its 200 quarter moving average, and trying to, go back to the October 22 high. And this was the first low in the bonds, okay? High in yield when the bond futures went to 117 and then rallied 14 bond points. It's that same swing. So if this were to take this out, then I would expect that we're going to see much higher rates, because that just seems to be how it's moving right now.
Wow. And let's see, what about on Canadian Mexican peso cross currency?
Yeah. Okay. So here, for me, the euro isn't doing anything. Where did I put that?
Back on the euro yen.
Well, we had the euro yen. Here's the Canada Mex.
Yeah, Canada Mex. Cross currency.
And any of these charts, if you're looking at the yuan or you're looking at the Mexican peso, you want to measure all your stuff from NAFTA, which is 1994.
Okay. Yeah.
And anything before that is a waste.
Yes.
So this has some more room. There's room for more Canadian weakness against the peso.
Yeah.
What else we were looking at? the Indonesian rupee, where you wanted to look at that.
Oh yeah.
This is another one where you measure from well, this one was basically 97 where it started to move.
Yes.
But this is just, you had the one giant devaluation,
yes.
2-year devaluation, or 1-year devaluation, and it tried to retest in 2020. This is just there's nothing to show you that this can strengthen.
I see. Right.
At least not yet.
Yeah. And what about the Brazilian real currency?
Well, here it is. I think you have to look at a little bit shorter time frame on this. It seems like it wants to strengthen on the quarterly, but I don't know if it's going to get very far. The shorter term stuff, is mixed. And then if you extrapolate that into their stocks, this is basically an S&P chart. All these emerging market charts, if you look at them, are basically an S&P chart.
Yeah, this is EWZ.
Yeah, this is the EWZ
ETF. Yeah.
Right. If I look at Mexico, it's the same type of thing. It's trading with the S&Ps. All of it trades with the S&Ps.
Strong correlation, you're saying. Yeah.
What's Argentina trading with the S&Ps. Nigeria, it looks like it wants to hold, but when you hold on. Give me this.
This is Dr. Mark Faber's suggestion.
Yeah, and I'll show you why he thinks this. Okay, there's a life of this. So, it's this ETF from in 2013. It's gone from basically $70 to $7.
Wow. Okay.
So if you want to, I don't blame them. But you don't want to. It's got to be a really small portion of your portfolio.
Yeah.
I want nothing to do with these.
Yeah.
Most of these. I just think there's better places for your money.
Yeah.
And certainly much better trading vehicles that are liquid.
Yes.
So that's my view on it. Here's Colombia. This is sideways, big sideways on the monthly. The quarter is going sideways to lower. The semi-annual shows you nothing that's really positive other than it's oversold and it's trying to hold. But, for me, there's nothing that, I would hang my hat on with some of these. I'd rather trade the U.S. Let's just put it that way.
Yeah.
All right. So now, if you look at Argentina on a quarterly, it still has more to come down.
Yeah.
The S&Ps, this is the U.S. session chart, okay? And this is the Powell pivot from Jackson Hole. And this is the exact same chart that we looked at the last time that we spoke.
Yes. Right.
There's the huge break, 700 points, retested, another big break. Once it went above it, it went up to one of our matrix levels up here. I thought there was maybe another 100 points left in it, and it turned around, and that was the end of it. So and today it's, it acts toppy again.
Yeah.
And how we got that low, here we go. Let's see. I'm looking at these very long-term point and figures, and this green line is like a 50% balance line on the cloud. It came down here. It was a perfect spot. Everybody that's been short in my room for the last month and a half all got out.
Oh, yeah. Right there.
They got out of everything there.
Yeah.
And this was, you don't see the cloud on here just yet. It's still building, but that stopped in a perfect spot. And this would take a while, but this low was a channel line that I drew from the high of the NASDAQ. And it went right down to the tick and turned around and went straight back up again. Now you got a double top up here at matching the S&Ps at the type of work I do, and they rolled over and died again today.
Yeah. Are you able to show your powerful indicator on the spool bonds?
Yeah.
Yeah.
Let me just move these across. Let's see. Here's NASDAQ bonds. This is NASDAQ bonds on the daily. Got a little high today. This is, I follow two of them. I follow the all session, which stopped at momentum today and came back down. And the same thing in the pit. So the reason I look at the US pit charts is because they go back to 1982 versus what everybody else looks at, which is the wrong chart, which is the E-minis, which only goes back to 98.
Only, yeah.
So that's why you look at these long-term charts, the way I look at them. I always look at them both ways. So either you can go back to, this goes back to 1982. If I go, if I take it here, and I'll expand it. This is only going to go back to 97, 98. So I have higher targets in a lot of things, but it's been interesting to follow these charts because the bonds have been running them for the last couple of years, where the previous decade or two, it was all the S&P side that was running the spread.
Yeah.
So, I just get different interpretations off of it depending upon the day and how it's trading.
Any indications on trend for short, medium term?
Well, I think that it's going to be a big back and forth trade,
a
really big back and forth trade. Here, now you can see how this point and figure filled out, and you can see the bottom of this area here when I was looking at this channel line on this. You got a double top right there. It was a perfect low at the bottom of this downtrend. So I always look at the point and figures because there's all it shows you is price.
Yeah.
All right. And then the other thing we wanted to look at, right, was what did I do with it? It was oil.
Yeah, okay, move into
oil's getting interesting.
Yeah.
Let me get this a little bigger. Chevron itself looks like it's coming down. There's two oil charts you can look at. I like looking at this one where it went negative $40. Now I can, and that's a difference between an active daily continuation. If I put up a daily continuation, you're going to get something very different. Where the hell is it? Oh, hold on. One of them is going to give me a $6.50 low here.
Okay.
Because this is the low of the deliverable oil.
Okay.
I don't think that that's the right one to look at. I think that you use, hold on, give me that. All right. There it is. You want to use a daily continuation because it gives you the negative print. And then you take that swing to this high, and this is what it seems to be following.
Okay.
So, you had a bad high up here, in last quarter, and now it's coming back down. We start seeing price much below $75, then I think it can break another $7
down to like 68-ish.
Yeah, and I'm not interested in. I have places where you can buy it for bounces. Like I liked the setup yesterday.
Yeah.
One of the guys in the room was, I was looking at just over 75. He said, no, it should print 74.93. It printed 74.91 and rallied $2+ dollars. He's terrible.
Yeah.
So, we have people that chime in, and, I was just looking for a Wednesday contra trend trade. It was a pretty good one.
Yeah.
The gold's trying to hold. The low on the gold today was the 200-day moving average. Let's see. I got to go inactive. There it is. It held against the euro, held against the yen, held against the indices. But all these markets are now price specific trades. You have to be very patient and wait for your levels now.
Yeah. Any insights on copper for industrial metals?
Take a quick look. I think that copper's going to have problems just because it
like oil.
Yeah, it's just like oil. And, the weekly doesn't look particularly good. It stopped right at the 200-week moving average, but that's not the only way I like to look at copper. So I'm going to take you up to this other screen I have. And this is, basically IRA 101, right? And let me just pull this up a little bit. All right, there's copper denominated in yuan. So, on the daily, it came down into its balance line and held. But as you go out, I'm not convinced it's going to hold. So I'm looking at it and it's really kind of a sideways to lower pattern here. And you're looking for demand from China to see if it's going to go. And it's getting a little soft against, the bond futures. So I think it's going to have a hard time. Southern Copper can't get going.
Yeah, Southern Copper.
What was some of the other ones? Yeah, here. Let me get on here. So I can just click through them. BHP Billiton's not going anywhere. Volley's not really doing much. I mean, that's stopped. That's in the middle of nowhere. It's running into trouble in its major weekly moving averages. Freeport doesn't look good. And Southern's trying to just absolutely roll over here.
Yeah.
So I think that, and copper seems to be just a reflection of the S&Ps right now. They have these short-term rallies with the SPOs, and then it turns around, rolls over, and dies again.
Yeah. And let's see, the last set of the commodities, could we look at like agricultural commodities?
Yeah. So we were looking at this, and we have a couple of guys in the room that, a couple of farmers that are active. I like this initial pattern in the soybeans coming up, and today the crop report came out. It needed to hold this 1336 level, and it did. If it starts getting below 1336, this whole thing's going to just roll over and die.
Yeah.
Where's the corn? Yeah, there's the corn. The corn looks almost sold out. This is like a 400 week moving average, and it's just been going sideways to lower and bouncing around. So I think part of that is you have to get through the December crop into next year.
I see.
Here, let me just take one quick look just to see what that looks like. All right, so then you're going into March and May corn. It's the May. The May's just not that much higher. So while the far out months show a little premium, you're not getting paid to trade anything that's not front month. The wheat was a little. This is Chicago wheat, the Chicago wheat contract. This thing's just sideways. Right along its 200 week. It hasn't gone anywhere. And if you look at it on the monthly and the quarterly, it can't get going. It's got to get above, 603, 605 to try to put on a rally. And let's see, I want to look at and the Kansas City wheat. Ever since it doubled, all these, this wheat, that's why I have these long-term charts, those are multi-decade highs, and it's a double top. Now, this is the stuff they grow in Ukraine. It acts a little bit better than the
same variety type of similar.
Yeah, it acts better than the U.S. contract, or the hard red wheat acts better than the U.S. wheat. And this and that needs over what 660 even to start to go up.
Mm-hmm.
So a crop report came out today, and all the grains got slammed against the rice. And there's one of your I don't know, somebody that you had on as a guest had posted something about there was a rice shortage and people were buying rice against everything else. And other than that, I looked at the just going back to the currencies a second. The one thing we didn't cover was the yuan, and this thing is just sideways to me.
Oh yeah,
just sideways. And if you want to look at and the one you have to keep looking at, because we were looking at dollar yen, right? Well, here's basically the same setup. Is that dollar yen chart we looked at from October. We start getting through that high, the yen's gonna you're gonna have a big move here in yen yuan.
Mm-hmm.
So I don't really know how that's going to affect the equities in
Right.
in Asia,
Mm-hmm.
but that will affect everything.
Mm-hmm.
I mean, this area here at 2091 and the spread is going to be big, and I think that's going to line up with. It seems like it wants to line up with the $152 yen.
Mm-hmm. And maybe the last thing, could we take a look at uranium?
Yeah. Oh yeah.
Yeah.
Here's the ETF. I got the cash somewhere, but
That's the Sprott.
yeah, the short-term stuff looks good.
Oh, that's the equities. Yeah, you
Yeah.
are right.
Okay. And let's just take a look at this on a long-term basis. I mean, it's the November 21 high at 3160.
Mm-hmm.
So that's going to be the ball game there.
Back to like
so it's got room to get up there.
Yeah.
And that's a life of contract retracement that it went up to in 21 and backed off, and we've been going sideways to a little bit higher ever since. So I would expect, if it's any good, it's going to go back to the high 31s again.
Okay.
And then after that, it could double.
Yeah.
Camco.
Oh yeah, chemical. Yeah.
Yeah. I mean, here's another one. It wants to come back. There's 2,000 to that 2,000. Let me get that out of there. To the 2011 high.
Yeah.
And let's see what I want to see what the high and the low is. Whoa. Okay. Well, this is really big. This 4330 level is monster. So we start closing over it, it can go again.
Yes.
All the way back to the highs.
Wow.
So that's why if you don't open up the chart all the way and get the historical data, you can't really get a good sense of it.
Yeah.
That's back to that again.
And you able to bring up the uranium trust from Sprott?
Yeah.
The actual uranium price, yeah. Or the
got it up here. So let me just
align with the uranium price, yeah.
Yeah, there it is. Okay.
Yep, UN, yeah.
So it's right in a resistance. Now this is end of day data, so let's just take a look at the long-term chart. Okay, so this hasn't been around that long. Oh, from July 21. So it's not. I think that the URA gives you a better look.
Yeah, not much data on this one. Yeah.
Yeah, and what? Let's see what this can do. You know, it's stalled out at its a 50%
yes
area, which now when you get a long-term fib like that, it tries to come back to this one minimally, and if it starts getting underneath it, it tries to come all the way back. Now it basically went about halfway and stopped again. And I really like to look at things in 50%. So maybe you can go again. You think the fundamentals favor it. And a lot of it too is because you just saw that Russia was providing 50% of the world's reactor uranium.
Yeah, there's a lot going on here with Niger. There's some problems, I think.
Yeah. So makes sense to be long it.
Yeah. Cool. This has been great insight, Judd.
Well, it's always a pleasure to talk to you. I'm a little tired from the last couple of weeks.
Oh, it's been
having a hard time focusing.
No, it's been great. And how can our listeners, viewers, learn more about your work and even get a special trial?
Okay, let's just go back to this. You can go to my website at whitewavetradingstrategies.com, and all you have to do is put in your name and an email, and I'll put you on a distribution list. You'll get an invitation to my trading room, and we have people from all over the world, and it's just not one style of trading. It's all I have options traders, swing traders, fundamental long-term traders. Everybody's a lot of registered investment advisors. Everybody's a little bit different, so it's a great mix.
Fantastic, and just really in-depth, deep discussions, both fundamental and technical. And like you said, on the technical side from different perspectives. So it's really powerful.
Well, thanks, Richard. I appreciate it.
Well, great. Yeah. Thank you so much, Dad. We'll do it again in the next quarter. Thank you so much.
Okay.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.